Hello and welcome to Commodity Champions. I'm Manisha, Gupta. On today's show, we bring you insights from global leaders in the energy sector who were in the country for the India Energy Week. Prime Minister Modi inaugurated the second edition of the summit. In his opening address, he said India will see investments worth $67 billion in the sector in the next 5 to 6 years. The Prime Minister also expects India's oil demand to double by 2045 to a whopping 38 million barrels per day. He invited the world to invest in country's energy sector. On the sidelines of the summit, I caught up with Simon Flowers, Chairman and Chief Analyst of Wood Mackenzie, and began by asking him about where India stands in the global oil market.
What we're seeing is China still being a real force in the oil market globally, and in Asia in particular, and that's going to change over the next 2 or 3 years as China demand begins to peak by the end of this decade, and we see India take over as the fastest growth.
So are there any numbers that you're working with in sense of what kind of growth are we looking at? Because right now, as per the OPEC report, India consumes 5 million barrels a day, which can go to 11.5 by 2040. I mean, that's the kind of numbers the agency is working with.
Well, you've got to remember the background behind this is India's incredible economic growth. So it's fourth biggest economy in the world, and the fast growth means it's going to be what, third by 2030, 32. So yeah, I think those numbers are very aligned with ours.
And then when we talk about renewables taking over, there is conversation about hydrogen and biogas and natural gas and the right mix of energy that India should be looking at as well. What's your sense on the way India consumes energy as of now?
Well, like most countries, it's still wedded to fossil fuels. You mentioned oil, there's gas, and of course there's coal as well. And I think there's been a dawning of realization over the last 2 or 3 years that the transition isn't going to be a quick fix. So if we start with fossil fuels, India is going to need those for a number of years. It imports a lot of oil and a lot of gas, and both of those are going to increase in the next little while. And the transition into these new things, well, India is really a leader in experimenting with the new low-carbon technology. So renewables is a given, and India's already got a great platform, going to triple that by 2030, that's the plan. But it's also really interesting how much investment it's trying to encourage into the things that you mentioned, like carbon capture and storage, energy storage, and hydrogen of different colours, but particularly green hydrogen.
What's your sense on the demand for the fossil fuels, for crude right now?
Well, thank goodness for Asian demand, because it's helping propping up the oil market. So on the demand side, the world has been through a bit of a slowdown, but actually oil demand, as we bounce back from COVID, has been almost rampant. So we're still expecting maybe as much as 2 million barrels per day, which is, there's only been half a dozen years since 2000 that it's grown at that pace, and demand itself is at record levels. The problem we have from a fundamental point of view is that there's ample supply. So we've seen OPEC Plus cut 3 million barrels per day off the market over the last year. It's an enormous amount of money they have hidden behind pipes because there's not enough room on the market. Now, I think the interesting thing that you allude to now is there's considerable, let's call it geopolitical tension, but there's also military activity. The response by the US-led group on some of the the sort of terrorist activities going on in the Middle East. But the crude price hasn't gone up. It's quite incredible. It's been trading in a fairly tight range of $75 to $80 a barrel. And I think that reflects two things. One, that no production has been hit. If production gets hit, then there will be problems. And the second thing is that buyers know there's more oil that could come onto the market. Right,
so Simon, earlier the markets would also move, even if there was a sentiment impact. Would you say that that's totally absent right now?
I think it's absent because there's so much spare capacity at the moment. It's crept up on us, this spare capacity, through more effective investment in non-OPEC countries by some of the Middle Eastern producers investing in their capacity. But suddenly we find ourselves with record demand, but more supply than is really needed. It's an unusual state of affairs we've not seen for many years. But fortunately it's kept a cap on, because the world can't really afford to have high prices at the moment. It would stifle the recovery, which we do think is coming over the coming months.
So what's your sense on where the prices are headed? Because as you said, we've closed last year with a bit of a negative, and we've started this year in a very, very flat range.
Yeah, we've been surprised at the sogginess of prices actually, and what we're expecting through the course of the next few months is a bit of a pickup in the global economy. That'll tighten fundamentals, allow OPEC to get some more oil out onto the market. And so we'd expect prices to improve from here. We think $80 is a good benchmark, not much different to what we are today. But there's a risk, I think, over the next few months that we could see higher prices. Maybe not as high as 90, but somewhere in the mid to high 80s.
All right, so $80 a barrel, but can go to 90 before we end this year is the view coming in from Mackenzie. I also caught up with John de Villiers, who's Senior Vice President, Energy Industries in India and Middle East at ABB. He spoke to us about companies' bet on India. Let's listen in. What is the kind of spend that you're looking, especially for a market like India, which is, as has been talked about in the last couple of days, is the fastest growing and the demand also expected to pick up in double-digit percentage?
Well, we're investing to make sure we have a local team that is as strong as possible and that covers all the different segments where we see opportunities. So our investments in manpower, and then the business will come. Serving our customers to the best of our ability.
The other point that is being strongly talked about is collaborations. There are investments in downstream and upstream companies as well. How are you working your portfolio around in India?
I think partnerships are absolutely essential. There's no single company that has all the solutions in their own power. So working with customers in a collaborative way, and we find with the energy transition, earlier engagement, really shaping projects, simulating, modeling to prove the viability of the projects are essential. And then also finding partners in the market that can join us, that we can collaborate with, that can complete the solution, complete the offering to our customers. So there we're also active globally and also here in India.
You talked about on how you are increasing your manpower here in India, and what has been the growth that ABB seen within India in sense of customer as a base and your spend itself, and how are you envisioning the next couple of years?
Well, we're a company that supplies automation and electrification of industrial assets, including energy production assets. And these plants can't operate without automation and electrical. So we are key to enabling energy infrastructure. And what's really shifted is the ability with digital and data to draw insights and to add additional value, to plan better and to work better. And that's relevant across all the segments. So whether you're talking liquid natural gas, LNG, or you're talking conventional power, hydrocarbon power, or you're talking hydrogen or offshore wind or solar. So with energy management solutions, there are a whole range, asset performance management solutions. There are ways in which we can support our customers.
What is it that clients want, one, in India, and two, how have you seen the investments pan out?
What customers want is, if the minute we enter into agreement or a partnership with a customer, we are tied together for 15, 20, 30, 40 years. So service is absolutely essential, and that's what we need to make sure is we have the capability and the competence to support this infrastructure. So it's not just the capital sale, it is the long-term partnership in terms of the service. And then in terms of, different customers move at different pace, choose their focus, and we are active across the entire spectrum of energy provision. So we serve customers, if they have a very aggressive transition towards green and renewable, we will serve that and enable that. If it's a customer that are going to serve us with the energy of today that we really need to continue to grow the economy, we're fine to do that too.
So have you seen that categorization, more aggressive move into renewable come in for India?
There are definitely moves. I think the first move is obviously the move to gas. So we've been very active in enabling the gas infrastructure, gas distribution, which is a very positive step. But of course there are customers that are out there and already looking at green hydrogen. Solar has been a major source of growth for the energy supply, the primary energy supply in India. So on both of those fronts we're active.
How do you look at the way the states are operating right now? Where do you see more presence, more spend come in? How do you look at the Indian government policies in ensuring that?
Well, in terms of the government policies, very pragmatic, and what helps us is clarity. So I think, again, at this event with PM Modi's address, it was very clear where the country is going and how this transition is going to take place. So that helps us to deploy the solutions that are relevant for today and that enable the future. And across the states, I think it's the same kind of diversification that you see. So there are some states that play to their natural advantages in terms of the energy space, and that's what we support and that's how we follow.
All right, that's ABB telling us on how India is inching fast towards energy transition there. But I also caught up with Dr. Rakos, who's the president of the World Bioenergy Association. And I began by asking about the bioenergy opportunity in India and where does India stand within that space on the map?
Bioenergy is not a source of the past. Bioenergy is a source of the future. And that is in line with what the International Energy Agency says. It says that bioenergy is going to be the second largest source of energy by 2050. So that's what we are looking at, a sector that has the importance of the coal sector today.
So globally, where do we stand in sense of number here, and where do you see India therein?
There is a lot of traditional biomass use in India, and I think that needs to change. There is opportunities to take traditional bioenergy use to modern bioenergy use, and that's the challenge and that's the opportunity at the same time.
So are you looking at enough investments coming into the market, or do you think that bioenergy also seems to be competing with various other sources of energy?
What I do see here is a lot of fossil fuel energy industry, not too much renewable energy industry, and that I would say is an indicator that there is still a place for improvement.
When you look at India, do you see policy supportive of bioenergy going forward?
Absolutely. India has very supportive policies in the field of biofuels. It has interesting political provisions also for solid biomass. I'm thinking of the co-firing in coal-fired power plants. But fact is that there is very slow progress in developing the supply chains for that purpose. So that needs to accelerate.
So supply chains, you also mean infrastructure, that is, and modernizing it. So innovation, technology, are they being worked upon as well?
Innovation and technology, to be honest, it's there. The technology is there. It's the deployment that is still missing, and that needs to accelerate.
So when you look at the spend on ensuring that it is implemented, how much would you say has come into the markets already? So if you compare to the last 5 years to where we stand right now in the next 5 years, what is the kind of growth that would need to be seen in spend to ensure that we get those numbers right?
I think there was a great progress in liquid biofuels in the last couple of years, really a ramp up that is impressive. If you manage to create that similar ramp up when it comes to solid biofuels, using agricultural residues, for example, densifying them to pellets and making them available as fuel, then you are on the right track.
Kristen, would you say that all the time when we talk about decarbonization or bioenergy, it mostly is about renewables and not so much about agriculture? That is what needs to be really pushed on, especially for a country like India, which is clearly agrarian.
India has an incredibly large potential in using agricultural residues. But it's also a challenge. They need to be collected, they need to be processed, there needs to be investment in these processing facilities, there needs to be know-how that is made available. That's also one of the tasks of the World Bioenergy Association, to provide know-how, to provide international cooperation.
All right, those are the top voices at INW telling us on the fine balance that the government policies seem to be creating within the fossil fuels and, of course, the energy transition, on whether it's about hydrogen, green hydrogen that is, and bioenergies and biogas, etc. But with that, we're heading into a very short break. When we come back, we get to some more top voices on the energy in India. Welcome back, and there's more from the India Energy Week. Mansi Tripathy of Shell India spoke to me about the opportunities for the company in India and also its outlook for 2024. Let's listen in. When it comes to India, and because everybody almost seems to be talking about on how India is the fastest growing and the demand is going to go through the roof, explode, etc., what's your sense when you look at your investments and India's growth opportunities?
It's undoubted that India is poised for a lot of growth, and I think as Shell, we are very thankful to the government for all the policy interventions they have made, and also to the larger ecosystem which has supported us along the way, and we have done a good trajectory from where we were and where we are today. And as we go forward, I think we want to also continuously keep making bets in India and see how we want to grow with the vision which is there in terms of getting to net zero. We do have our own ambitions on net zero, so we are going to combine that together and make it a partnership of working in India for Shell. Yeah.
So how is 2024 looking to you? What are you looking to make in sense of an impactful change here?
So 2024, I think as part of our Capital Market Day, which started with our CEO, one of the big tenets over there is like more value and less emissions. So what we are trying to see is within our portfolio, how we can further high grade our portfolio so that we can create more value for our shareholders, create more value for our communities. So I think that's going to be a very big theme. And then also continuously work on our lesser emission target. So last year we've reduced it by around 1.6%, and we are going to continue with that journey as we move forward.
Are there targets there?
Nothing specifically which I can comment for India, because I think it's a continuously evolving portfolio. But directionally, we want to ensure that every year we are improving as we go along.
So when you look at lubricants business in India as well, how has the growth there been? That's one part of the story. The second also is about the international markets. What are the cues that you're getting in from there?
In APAC, our lubricants business grew about 36% in terms of the profitability, which is, and we grew market share, globally we are the market leader. So we do have, 17 years of being a market leader. In APAC, we are also the market leader. So I think it's more important that when you are the market leader, how do we keep growing? And what gives me even more greater sense is that it is not just the value part, but the fundamental volume part, which is also growing. We grew by 5% on the volume aspect, which is again a combination of our B2B customers who have placed more faith in us and our B2C customers who are also saying, hey, this is a great brand, I want it in my cars, I want it in my bikes. And they're seeing the efficiency and the better performance. So it's basis that fundamental pillars which I feel good about that our growth is dependent on. It's not one-time, interjections.
Absolutely. So when you look at the government policies, measures, subsidies even, a lot of companies have been, praising them. Some have been asking for even more than where it stands right now. As Shell, how do you look at those policies?
Yeah, so I think if you look at the electric vehicle, it wouldn't have been possible if the government hadn't put in the demand aggregation there, the FAME policies, and you can see the impact of it as you go forward in terms of the percentage of electrification which is happening. And I think as we go forward, we want similar initiatives from the government, say when we think of heavy-duty trucks and LNG, which is currently almost not present in India. So if you compare it to China, they have close to 600,000 LNG trucks now. Whereas in India, it is just at a very nascent stage. So I think we have to kind of keep repeating ourselves so that we can keep growing into new revenue spaces, and also for the government, because this can be a very easy win to get further decarbonization along the way. Because, it's a direct, if you replace diesel by LNG, that's a direct 30% reduction in the emissions. So it's a very fast and a smart way to keep doing it. And that's where we'll encourage and work with the government and the entire ecosystem to be enabling it.
Well, one thing is for sure that almost all the top voices seem to be complimenting government on its policies. It's implementation that everybody needs a push on. But I also caught up with Hardeep Singh Rai, Chief Executive Officer at City Gas Distribution, Thingas, to find out about the goals for the business within India.
We have built a lot of infrastructure. Ultimately, what we're trying to do is bring gas to that last mile connectivity to customers, whether they're CNG customers, industrial customers, commercial customers, or household customers. We've laid about 600 kilometers of steel pipeline, about almost 3,500 kilometers of plastic pipeline, really reaching out to our customer base. And now we're at the stage where it's all about encouraging customers to convert to natural gas. Ultimately, it's a cleaner fuel. And we're seeing customers take that up, but at a slower rate than we would necessarily like. I think, where does gas fit into the Indian ecosystem? I think ultimately the whole world is on a story reaching net zero. And in India will also at some stage reach net zero. I think this transition in India will be much longer than it is elsewhere in the world. Some will achieve it in 5 years' time, 10 years' time. India will be a much longer story, And in that, gas will play an extremely important role. And I think we're at that beginning stage where people are beginning to understand the importance of that, the relevance of gas. I think there's a lot of things that could be done to increase that trajectory of growth for gas. And to some extent, the industry is coming together, working with regulators, ministries, states to try and make that happen. And we're seeing some of that happening now.
So from where India's mix stands right now in sense of crude and gas and LNG, etc., where do you see that transition stand as of now? And what's your sense on how would we look at the numbers next 2 to 5 years?
Well, so I'll give you a couple of numbers. Right? So right now we talk about being at around 6%. In the overall energy mix. I won't disagree with Mr. Modi, who wants it to become 15%, and it will become 15% one day. When that will be, I think is kind of lots of people have different views on that, but it will get to 15%, I'm sure, in due course. And I think we just have to be patient. And again, as India's economy grows, that the total volume of gas will grow. The actual percentage may not grow quite as fast, but the volumes will start moving through the gas system, the gas infrastructure that's now being established. And I think we'll see quite a material change. I would give yourselves a target of over the next 15 years. What we see today versus what we see in 15 years will be like night and day. What happens in 5 years or 7.5 years or 10 years, I think we have to be a little bit more patient. But 15 years, I think it'll be night and day.
And would you say that the investment and policies are in place for the numbers that you're expecting in 15 years?
I think we're heading in that direction, right? It could be 5 years if the policies change more quickly, and the infrastructure could be laid more quickly. But I think overall, the direction of travel is positive. There are some things that we would like to be faster. There's always the interaction between GST, VAT. It's been a long, ongoing debate. We always get positive signals, but it never turns into an action. At the state level, different states have different rates of local taxes. Again, positive signals, but we need an action. Right? So I think we're at the stage where the industry has gone and had put a lot of action in. Right? So we have invested probably close to 350, coming up to $400 million in building our infrastructure. We now need to make that productive, and we need the support of multiple regulators, ministries, governments at the central and state levels to really drive the return and the productivity of the assets that we put on the ground, because that will encourage customers to take gas. It'll also encourage us to invest more, and it'll also encourage the penetration of gas into the Indian economy.
All right, important words coming in there that as of now, the gas mix to India's energy basket is just about 5 to 6%, needs to go up to 15%. Well, that is something that the PM also has talked about and working in that direction. So that's our special on energy this time around from India Energy Week in Goa. But with that, let's wrap on this special episode of Commodity Champions. Stay tuned.